talk about NTPC, which has reported the earnings. You would have seen that there is an increase in bottom line by 23% YOY to 7,611 crore from 6,168 crore in the last year same period. But more importantly, there was a dip in margins, which markets may not like. EBITDA margin stood at 29.6% compared to 29.8%. There was also a dividend announcement by the company of rupees 3.35 per share. And there were also interim dividends already announced in the year of 2.5 rupees each earlier. But all in all, mixed set of numbers. There is a beat in margin, which is down 21 bips YOY, which markets may have to see.
That's right. On to another earnings counter then. It was a mixed set of numbers for JSW Steel as well. For Q4, now revenue was aided by volumes that rose about 8% on a consolidated sequential basis. Meanwhile, margins missed the mark in the quarter gone by. Ashesha is joining us to do all the number crunching.
Well, yes, JSW Steel has reported mixed set of numbers in the quarter gone by, but as you mentioned, volume growth was very strong. In fact, standalone volumes rose by about 3% on a sequential basis, and that aided revenue growth in the quarter gone by. Consolidated revenue has come in at 44,800 crores, which is an uptick of a solid 8% on a sequential basis, but margins have come in a tad bit below what the street was working with. They've come in at 14.2% versus ET Now poll of about 14.8%. But remember, standalone spreads have also risen on a sequential basis on account of efficiencies and lower coking coal costs in the quarter gone by. So standalone EBITDA per ton has come in at 8,800 rupees per ton, which is an uptick of a solid 12% on a sequential basis, and net debt has also declined by about 5% sequentially. So all in all, numbers look good. No major complaints as such. Volume growth was very strong. Management outlook continues to remain very positive, and spreads have also expanded on a sequential basis. But remember, management has given some important commentary with respect to Bhushan Power's acquisition and the recent Supreme Court judgment, where they say that they will be resorting to all legal remedies that the company has in order to ensure that they get the rightful decision going forward. But for now, a mixed set of numbers coming in for JSW Steel, no major negatives, and volume growth and EBITDA margin expansion has been a key positive this time around.
Thanks, Ashesha, for that detail. Now, after JSW Steel and NTPC, which are the stocks you need to watch? We have Ravinder to tell us which are stocks in news.
Well, as NTPC can be in focus, where company has announced its Q4 number, and company reported revenue at rupees 49,834 crore, which was up by 4.5% year-on-year basis. And if we talk about net profit, then net profit also saw a good uptick of 24% year-on-year basis. Moving to next, ABFRL Aditya Birla Fashion Real Estate is can be in focus, where company reported revenue at rupees 1,719 crore. We saw an uptick of more than 9% year-on-year basis, and company reported net loss as 17 crore as compared to loss of 230 crore year-on-year basis. Moving to next, Narayana Rudralaya can be in focus, where company reports as a Q4 number, and the company's Q4 revenue saw an uptick of 18.5% year-on-year basis at rupees 1475 crore, and EBITDA also saw a good uptick of 22% year-on-year basis. And Glenmark Pharma can be in focus on back of Q4 earnings, where company's revenue saw an uptick of more than 6% year-on-year basis, and companies reported a profit at rupees 4.6 crore as compared to loss of 1,242 crore year-on-year basis. Apart from this, the Bharti Airtel can be in focus, where Supreme Court dismissed Bharti Telemedia appeals, and total estimated exposure pursuant to the judgment is rupees 585 crore, which is fully provisioned in the books, and is which is 575 crore, which has company already paid by Bharti Media Telemedia Limited. Apart from this, Paytm can be in focus, where Supreme Court has stayed GST demand order of rupees 5,712 crore on First Game Technology Private Limited, which is a subsidiary company of Paytm. Havells can be in focus, where company to further enhance its annual manufacturing capabilities of cables at Alwar location by 0.25 lakh kilometer with an additional investment of 340 crore. So back of this, Havells can be in focus. Now looking into some pharma stocks, then Divi's Lab can be in focus, where company has signed a long-term manufacturing and supply agreement with global pharma company. Dr. Reddy can be in focus, where US FDA has completed a GMP inspection at API manufacturing facility in Telangana, and US FDA issued a form for 483 with 2 observation. Zydus Lawson can be in focus, where Zydus receives final approval from US FDA for one of its capsule, and capsule has an annual sales of USD 15.4 million in the United States. And lastly, Biocon can be in focus, where Biocon Biologics has received MHRA UK approval for US intake.